Hi, welcome to the market view for Thursday, the 21st of August 2014. Starting off with the British pound, you can see that yesterday in the 30-minute chart we've got a buy signal there, which prices following moved higher. It was qualified by 8 a.m. and then prices continue to move up. And this big spike here is the MPC vote. And I'm just going to switch to Forex Factory just for 1 second. And the reason the market moved higher, I know I said in yesterday's market view that really wouldn't get much of a reaction because we haven't done for an awful long time. But yesterday you'll notice that two members of the committee have said that they would like to see interest rates increase. Now you can see all the way back, all the way through, it is the same all the way through 009. But yesterday, when it was released, 2 out of the 9 now are saying they would like to see interest rates go higher. So that's fascinating, and this is why, if you were long yesterday, you saw the market move higher, and prices continued from the entry point up to the peak around 60 pips there. So it was one of those where, really thinking about it, logically, because you've got historic lows in interest rates and the 009 vote all the way through from 2008. So really, if interest rates are to go up, that's good for the pound. So any inkling that there's going to be a switch is going to give a burst to the upside, which is what we saw yesterday. So we had the buy signal, and then this yesterday out of the blue, I have to say, because Carney keeps vacillating on whether he's going to increase interest rates or not, what he's going to use in order to measure and then do this, as I've spoken about on a number of occasions, including this week and last week. However, obviously there's murmurings behind the scenes that interest rates need to rise. We then see prices come back and then sit at the DP level before they turn around and move lower. In the 60-minute chart, we see the same thing here as well. Let me just widen the price bar so you can see more of this. Again, we see prices giving the buy signal, prices moving up, and then again sticking at the DP level before moving lower. In the daily charts, we can see that we've got prices just sideways to lower there. This hasn't loaded properly, actually. There is the bid and ask line is down here. So let me just pause the video 1 second and reload the workspace, see if it redraws the price bars in the daily chart. Right, that's better. Now we can see that we've got the correct bars there. Yesterday you can see the market opening, moving higher and then coming back onto the lows. And then the same for the overnight market again. So just to bring you up to speed, there's the bar for yesterday moving to the high, then coming back down to the lows, and then we've moved lower on the overnight as well. So still moving to the downside in this British pound market in the daily chart. Let's just narrow the bars a bit so we can see where we're at. Let's just draw in some fibs here as well, just see what we're getting from this low to this high. We're already through the 76%, which we've already drawn in before, if I recall. So let me just do this, and let's move to this one to the left here. So we'll take this low here up to the high, and then you can see we're just through the 62. The 76 takes us back down to the low over here, which we can just draw in as well. So let me just move this one over to the right a bit. So we're looking at 164, 164.64. So let me just save this, because that's obviously why it disappeared off the chart yesterday. So that's where we're looking at ultimately. To the downside is support to the left there. We're through the 62%, 76 is there. On the news front for today, we've got just some French news out at 8 a.m, German news then, and GDP news. Retail sales at 9:30. They're forecast to show a slight improvement there, which could boost the market if they do come out as forecast. If not, then more downside pressure. We've got public sector net borrowing also to show a minus 1.98. I'll believe that when I see it. Unemployment claims for the US, the weekly one at 130, and existing home sales then later on. Philly Fed at what we got there, 3 p.m., which is the normal time for the Philly Fed announcement there. So one or two economic news items today, which could help to move the market, which we have seen a bit more volatility in the markets during the last few days. So let's have a look at the Dow, see what this did yesterday. It continues to move higher. Yesterday trading through the just through the 16,983. The next upside target, of course, is 17,056. So that's the next upside target. It's a V-shaped correction, which means that the market dropped down and is coming straight back to where it was before. And on the implied volatility front, this actually moved up slightly yesterday. It was 871 the day before, 895, and just moving up slightly there for yesterday's trading session. Whilst I'm talking about the Dow, tomorrow I will be releasing a 128-page manual of all of the trades, showing 1,000 points profit during the testing phase. It's fully audited, along with the settings and spread betters that you will need in order to trade the Dow in the afternoon session. For those of you that are interested, it's a completely free upgrade as a thank you from me for your support during the quieter times. So that will be available to you around 4 p.m. tomorrow, if not a bit sooner. So keep an eye out for the email from me tomorrow on this. Right, well, that's it for today. Let's hope that the market continues to give us a few more pips. Things seem to be livening up a bit more, which is good to see. I will speak to you tomorrow. As ever, thank you for your support. It is very much appreciated. It's not an idle remark by any means. And as ever, thanks for watching.